Good morning, traders. John Caruso coming to you here for the morning of April 22nd with your Market Insight pre-market video for the session. A couple things of note here this morning. The initial claims numbers here in the United States were released, and we did see them once again decline. 547,000 claims versus 576 week over week. The 6-month trending average is down in the initial claims number, and that is something that you certainly want to see if you're positive on the United States economy, as we are. The claims data continues to trend lower, which is definitely a positive development for the overall employment picture here in the United States. We did also hear from the ECB and Christine Lagarde this morning with their monetary policy statement. They did largely leave policy unchanged. Their PEP program is set to run at $1.85 trillion for the foreseeable future as well. European PEP program, of course, is European QE. Christine Lagarde, she did also make note of the recent steep incline in the euro versus USD FX exchange rate. She is monitoring that and its potential effects on inflation going forward, so keep that in mind. Taking a look here at the bond market. One of the big major macro shifts we're seeing in the market right now is potentially in the bond market. The bond market, where largely it has held negative momentum from the back end of last year into the first part of this year. The momentum signal on our charts are actually starting to neutralize right now, which is suggesting an overall potential shift in the near-term direction of the bond market and potentially in the yield markets, of course. We have seen 10-year yields hit as high as 1.78 this year, and we have steadily dropped to about 1.55 here this morning over the last 3 weeks. Even in the face of accelerating U.S. data, accelerating inflation data, the CPI, the PPI numbers have all been very accelerated on a year-over-year basis. And of course, the blowout retail sales number that we saw recently over the last 2 weeks as well. So the bond market has largely looked through all of that data. The one thing that the bond market is good at predicting a change in economic cycles, perhaps a transition away from a very favorable time period for the economic backdrop, which has been Q1 and Q2 of this year, to perhaps a less favorable economic backdrop in the back half of this year. So we're going to keep an eye on that. We still think the bond market has another shot on the downside, yields on the upside, but 1.78 in the 10-year yield looks like a pretty good anchor point for interest rates right now. Taking a look at gold and silver, some interesting developments here. In our model, we still remain bearish on gold. Gold is still bearish trend on a 6-month trending basis. However, it is bullish trade on a 3-week trading basis. If I take a look at the silver contract right now, silver is actually bullish trend on a 6-month trending basis and bullish trade on a 3-week trading basis. So when I kind of take a look at that correlation right there, I still do think that there could be a little bit more upside in the gold market before it hits some resistance. Same thing, obviously, with silver. But I do think that there is a good potential to play that silver to gold ratio where you could start to see the price of silver close in and narrow that gap with the price of gold. So interesting trade. If you want to know more about it, feel free to drop me a line by email or phone. I'd be more than happy to discuss it with you. If you want to jump on our email list, I do write a market insight letter that I push out to clients and prospecting clients every single morning. I'd be more than happy to extend you a 6-month trial to that program. We also do send out trade signals by email as well. So keep that in mind. Once again, I'm John Caruso. Feel free to reach out anytime. Take care.